Hello everybody, and welcome to today's video where I want to talk about the three stocks that I'm going to buy this September, as well as one asset that I'm actively buying right now. So let me get started. The first stock that I'm buying this month is Tesla. And I don't talk about Tesla much on the channel because everybody else talks about Tesla on YouTube. But I am more bullish on Tesla than ever, actually, and it's already my biggest position at a little more than 30% of my portfolio is Tesla. But why do I want to buy Tesla still and want to buy more Tesla? Well, first of all, it's worth taking a step back and looking at total return and looking at what is the asset that has grown the quickest out there? What is one of the quickest growing assets in the history of assets? And Tesla would be one of these assets. Another asset which will be at the end of this video, Bitcoin would be another asset. It's very, very rare to find companies that go from nothing to market leaders in such short amount of time. And so there is a special recipe about these companies. There is something special about these companies. And when you look at Tesla, you can see that since IPO, it's a 46% average annual return. So we're talking about life-changing returns for Tesla, right? Tesla, since IPO, has been a 153 bagger, and it's only surpassed by Nvidia, which has been a 200 times bagger. Now, of course, I actually believe Tesla is gonna get back in the lead and become the leader again here, because Tesla's right now valuation is very depressed, and Nvidia's valuation right now is not depressed. But these are typically stocks that track closely, and I could add Enphase. Enphase is the second stock, but I'll talk about this video. So assets have inertia, stocks have inertia. This has been one of the best total return stocks in the history of stocks, and I believe this will continue to be like this. This will continue to be like this, and I'm very happy to buy Tesla. And a few points about Tesla is, a lot of people say, oh, look, it was a bubble. Tesla is in bubble territory, a little bit like people are saying right now for Nvidia, for example, including me. I've called Nvidia kind of expensive. And this is what happened to Tesla in 2020. And when Tesla went over $410 a share, people were saying, and it went very, very quick, by the way. People were saying, oh, it's a bubble. Look what's happened. But it's important to understand kind of how the Tesla stock behaves. Tesla is understood by a small community, and relative to the financial community at large, it's a small community that understands Tesla. And, every 3 to 4 years, there is this valuation reset where the market realizes, well, wait a minute, this community of quote-unquote Tesla fanatics has been right all along, and you see that this stock, Tesla, keeps going through valuation resets. And when you look at the long-term performance of this company, and you look at the long-term chart, not with a log, the regular chart, not a log chart, you don't understand, because it looks like the stock went nowhere from 2010 to 2020, and then in 2020 it looked like it did a 10x. And that's actually the wrong way to look at it. When you look at this stock and you zoom, for example, from the 2010 to the 2018 period, we can clearly see that there's 2 step changes in valuation that have happened on the way. So this is actually the third valuation reset, the third step change that Tesla goes through, right? It's the third time that Tesla does between a 5x and a 10x in valuation in a very, very short amount of time. Which is why I want to be in this stock, because I don't know when the next valuation reset is gonna come. Is Tesla gonna do its next 5x, 10x move in 2025, or is it gonna be in 26 or in 24 or at the end of this year? I don't know when it's gonna do its valuation reset. But this is a stock which, to me, is gonna have a sharp reset to the upside, just like we've witnessed for Nvidia over the past 6 months. And people will be surprised, and people will be calling it overvalued again. Except when this stock resets, it never goes back to the old level. That's why this is a stock, Tesla, but you could make the same argument for Bitcoin. This is a stock that is best understood on a log chart, and we're not really used to looking at stocks through the lens of a log chart, but nonetheless, that would be useful for Tesla. So why do I own Tesla? What are the qualitative reasons that I own Tesla? Well, I own Tesla because of EVs, essentially, and because EV adoption, in my view, is an absolute certainty. It is an absolute certainty. Most vehicles will be EV, and there's still this idea in the market that people are buying electric cars because they get a subsidy or because these cars are green. And that used to be true in the early days, but that's absolutely not true anymore. In fact, most people who buy Teslas because they are rational. And why are they rational, right? Well, when a product, and this is what the 0 to 1 book teaches us, right? Peter Thiel, friend of Elon Musk, wrote that book. It's the DNA of the PayPal mafia. Elon Musk is a member of the PayPal mafia, quote unquote, titled PayPal mafia. It's not an actual mafia, but anyways, these PayPal mafia members, they have this view of how business should be done, and the idea is that monopolies are created and competition is denied any hope when products are both cheaper and better. And this is what Teslas are. Just like flat screen TVs are cheaper and better, Teslas are cheaper and better. And that's the point of developing these vehicles or developing these 10x products, is that there's no hope for the competition. And when you look at Teslas, we understand, right? So it's much less expensive than a gas car, which is the early day selling point, right? Between 7 times and 13 times cheaper when you just charge it at home. It's gonna cost you less than $10, for 400 miles with an electric car, less than $10, right? It's not comparable to a gas car. It's an order of magnitude cheaper. There's very little maintenance, right? Very, very few moving parts, right? An engine has more than 100 moving parts. A electric motor is 2 moving parts, a rotor and a stator. Right, not going back to science school, but that's one effect. Things in modern. You have a tax credit at the federal level, at the state level, and of course, other countries have plenty of tax credits. It's not worth noting that people are now realizing slowly that the Model 3 is now cheaper than a Toyota Corolla around the world, which is kind of insane, because the Toyota Corolla is, of course, the best-selling car in the world, and the Model 3 is cheaper. The Model Y is actually cheaper than most SUVs. The Cybertruck will likely be cheaper than any modern-day F-150 when it gets out. I have very little doubt about that. And EVs, of course, they last much longer. Tesla is known, you may remember early days of Tesla, the million-mile car is what Tesla promoted itself in the early days, and of course, why? And it's marketing, it's promotional, right? Probably the life expectancy of a Tesla is probably between 400 and 600,000 miles, probably. But why do they last much longer than any diesel car? Even they last much longer because, again, it's only 2 parts: a rotor, a stator. Well, you have a gearbox, but you don't have a gearbox. You have like an amplifier of gears. You have a few gears, but that's it. It's very easy for Tesla to last longer because it has very little moving parts, and you understand what I mean here. Now, why are they better? Well, they're better because, of course, acceleration, for example, is better than any other car because it's electric. It's instantaneous. You just send the power down the motor. It disrupts the gas station. You don't go to the gas station anymore when you have a Tesla. It's actually a huge positive that most people ignore. Gas stations are actually where a lot of crime happens, and there's a lot of issues with gas stations, and they sell alcohol at gas stations, and you get people asking your number at night, especially if you're a woman at gas station. It's not a fun experience. It eliminates that. That's why Tesla's better, right? They eventually drive themselves, and though most people don't believe that's going to happen, you have more cargo, more storage, right? The whole idea of a front trunk, better air filtration, better crash tests, better infotainment, better built, right? It's a single cast as opposed to a multicast. It's very widespread, and of course, the range, in my view, and this is something I've always said about Tesla, is that right now we're seeing the range of electric cars just beginning to outpace the range of gas cars. And for example, the Model 3 is 421 miles. In the higher end version of the Model 3 is 421 miles. Which is stunning. It's actually more than my gas car that I currently drive. And in my view, this will keep going up. And we will have a 1,000-mile electric car at some point, especially as electric cars begin to serve as home electricity backups. That's kind of my view. And then, of course, the argument of gas stations will be entirely moot. Because if you have a 1,000-mile car, really, most road trips you can do without even charging. But anyways, that's the nature of technology. These cars are getting better and cheaper every year, just like flat screen TVs. And really, and this is the reason why Tesla is my number one position, is because we have fairly confident long-term guidance of 20 million cars by 2030. Which equals to roughly 50% growth each year for the foreseeable future, and for until 2030, which I guess as far as time horizon goes is pretty far out. Musk has also explicitly guided for the company to be worth $5 trillion by 2030, and that's not the second time he does that. He actually had guided for the company to be about the size of Apple back in 2017, and it reached the size of Apple about 5 years later. So to me, when you chart out the revenue of that company and when you start thinking in 2030 terms, I don't have a hard time imagining a company with $1 trillion in sales in 2030, given that today, with about 2 million vehicles, they do fairly close to 100 billion, right? So if they 10x the number of cars, they will 10x the revenue, and then put a price to sales on $1 trillion in revenue. What's the price to sales? Put a 5 price to sales, which right now Tesla is trading higher than a 5 price to sales. If you were to assume price to sales compression, you would still get at $5 trillion. So to me, as far as a risk reward setup, I have a hard time finding a better risk reward setup in the market right now. Any mistakes as far as valuation goes when you buy a stock like Tesla, in my view, no investment advice, but in my view, is corrected by the fact that this company is going to be 50% bigger a year from now, right? 12 months later, it's going to be 50% bigger. So even if you were to pay 50% more than you should for this stock, just wait a year and time will solve the problem of quote-unquote overpaying for this company. I actually view this company as fairly undervalued today. Not to mention everything I've discussed so far does not include things like Tesla Energy, right? Their Megapack system. Tesla Solar is not included either, but in Variable it's not included. Tesla AI, what's the value of AI? There's no value whatsoever placed on the AI business of Tesla. And what's the value of the supercharger network? So we have a company that's really looking more like a modern day Standard Oil than it is looking like an auto company. I could put more. I could talk about the vertical integration. Vertical integration is also a big deal that Tesla has and then other automakers don't have. So I consider Tesla to be one of my lowest risks positions out there. And you'll see there's a position that I consider even more lower risk. I'll talk about at the end of the video. So that was it for Tesla. I'm going to be buying Tesla this September. Next stock I'm buying, and I've been buying this stock for the past 2 months, but I'm going to keep buying it. It is Enphase. So Enphase is, of course, the other revolution that we have in the energy space, in the energy independent space. First of all, why would anybody want to buy Enphase? Well, if you buy Enphase, you have to believe in this statement, which I do believe in. And it's not a belief, it's a fact. I think it's a fact. But, today our arguments, if you don't agree on facts, is very, very tough. But today, it doesn't matter which way I look at this market, solar energy is the cheapest form of energy, and of course, this is still, I believe, a widely misunderstood statement to make. That's why I recommend always looking at Tony Seba or any other interview of Shamat Palihapitiya on the topic. People who are much more popular and known than me, who will walk you through their demonstration as to why it is cheaper. And it is the cheapest form of energy. And because it's the cheapest form of energy, solar photovoltaics is what I mean by solar, I think it's going to grow tremendously in the future. And in my view, we're going to a world where most single-family homes will have solar on their roof. It just makes sense. It just makes sense that we would produce our energy on our roofs and don't have to go through the grid. And right now, it's only about 4% in the USA and 10% in Europe. And keep in mind, these things are getting adopted because the payback on solar is between 5 and 9 years, roughly, depending on where you live. 5 and 9 years. That's a great investment. It's a better investment than a lot of even index investors get. It's a great investment. It's very compelling, especially if you can borrow money to buy it. Which right now is the reason why this stock is down, because Mr. Market tends to be a single issue trader or a single issue evaluator of stocks, and he's like, okay, interest rates up, therefore nobody's going to buy solar, and they're really ignoring the trends that no, people are buying solar even if interest rates are high. And this is my style of investing. I try to go in at the early signs of product adoption and get out, sell when the growth slows down. And to me, we are in the early days of solar adoption. And this is a stock that is down well over 50% from its all-time high. And I consider it to be a steal at $128. And I know in my comment section, a lot of people say, oh, I'm waiting until it gets under 100. But you see, to me, for a stock like Enphase, I prioritize position size over position average cost. Because I know that if it drops to 100, everybody's going to tell me it's going to drop to 60. And it's like, when are you buying? You're always going to have a share of the noise out there who tells you it's going lower, it's going lower, it's going lower. To me, this is my second biggest position, and I intend to have it remain that way. I really believe in solar. I made this is my longest video on the channel, an hour and 35 minutes video that I did full analysis of Enphase and why I believe in Enphase. And of course, these are condensed videos, right? I've made dozens of videos on Enphase regarding all of the intricacies of the stock. If this is going to be the second largest position, I want to make sure I know what I'm talking about. And this is no investment advice, of course, but I really believe in this company. So why is Enphase my pick in the space? Well, first of all, I've eliminated solar panels. I don't want to invest in solar panels. I believe they're a commodity. They're a better commodity than oil because they're not a flow-based commodity. They're a stock commodity. So it's a little better than oil, but it's still a commodity. There's not enough room for differentiation in solar. I mean, some solar people argue look better than others, but it's just going to be on your roof. People are not going to look much at your roof. So it really doesn't matter to me. I don't think people care too much about that. And also the problem is that China is dumping solar. China is heavily subsidizing the solar industry and it's dumping solar panels around the world, such that solar panels from China, in some instances, are cheaper than plywood, which is kind of crazy. Solar cheaper than plywood. And furthermore, because they're like flat screen TV, i.e. they get better and cheaper every year, it means that it's just a really, really rough space to compete in. And that's why I don't want to be in the solar panel business, but I want to be in the solar in the residential solar industry, install business, the business of setting up grids inside your home, setting up your own independent grid from the home, entirely cut from the utilities. And if you're looking at this setup, which is what I'm looking to invest in, and which is what I believe in the future, I think in the future we'll be making our electricities from our roofs on our single family homes, and we won't be buying electricity from the grid. That's not what I believe. Just like we don't buy ice cubes from the ice box at the center of a village anymore. We make ice at home. We're going to make electricity at home. We have more than enough solar roof space for solar. And in this space, there's two chief players, Enphase and SolarEdge, and Tesla might be a third one, but we'll see if Tesla has enough attentional resources to actually grow that business. I mean, only future will tell if Tesla has enough attention to that business. But right now, it's Enphase and SolarEdge. Actually, SolarEdge is still a little bigger than Enphase because SolarEdge started running faster than Enphase early on, but I believe now Enphase is the better play. Anyways, quick question: why would you prefer Enphase over SolarEdge or vice versa? Well, this has to do about the debates between microinverters and central inverters. My pick is microinverters, and by definition, if you pick a microinverter, you pick an AC coupled system. That's my pick, but that doesn't mean that I don't sympathize with the arguments of folks who pick DC coupled system and central inverters. In fact, they make a lot of good points as well, such that the fact that really DC should have won. Really, our homes should really be running DC current and not AC current, and it probably makes a lot of sense to not invert our current every single time, because most of our devices right now are electronic devices, and they use effectively, they use DC current, all of them. It's what we use DC current for most of the time, and so we end up inverting current back to DC for almost most appliances of the future. Like most of the applications of power of the future will revert back to DC. So I understand that argument. However, to me, the world we live in is we live in the AC world. We live in an AC coupled world. The standard is AC. Actually, if you look at history, you may know that the width of roads, the width of trains, the width of cars, that width still dates back to the Roman vias. Like it's a 2,000-year-old standard, and we use that width because the Romans used to use that width more than 2,000 years ago. So I'm afraid sometimes standards don't change that easily. AC is the standard. It's been a standard for more than 100 years. Even though I agree, DC makes a lot of sense, that doesn't mean we're going to be able to change the entire infrastructure. So that's a practical reason why I choose AC coupled systems and why I choose microinverters. And there's more practical reasons as to why I choose them. Is in the USA, for example, the Inflation Reduction Act subsidizes microinverters at 11 cents per watt versus 6.5 cents per watt for string inverter for string inverters. So the government clearly shows microinverters, and it's noteworthy to say that it's much easier to manufacture a microinverter in the US than it is to manufacture a central inverter in the US. Much easier because they're consumer electronics. Microinverters are tinier devices that are mostly made by machines, right? There's less human labor in making a microinverter. So that's kind of a reason. Another reason why I prefer AC coupled system, which is what Enphase is the leader in, is that most electricians know AC. They know how to use AC, how to install AC. They don't need to be trained on DC as much. There's more training in DC coupled systems. And lastly, microinverters are much easier for installers, and that for two chief reasons. Is that if you do a central inverter, you're going to have to put optimizer on the roof, optimizers under each panel on the roof, plus a bulky central inverter on the wall. If you just do microinverters, you only have one step, which is microinverters on the roof under each panel, and so as an installer, you save your back, essentially, because you don't have to lift that very heavy central inverter. Although they've made progress and they've made them less heavy, it's one of the aspects, and that's where I think Enphase shines. Enphase really does everything to facilitate the life of its installers, whether it's with microinverters or with the new batteries that they specifically designed to be light and easy to install. Anyways, I'm not faulting, and anybody can choose. I think SolarEdge will be just fine, and Enphase too. And if you look at the long-term returns of both of these stocks have been doing well. But when I look at the long-term returns, Enphase has had a slight edge over SolarEdge, and I think this will continue, which is why I only own Enphase and not SolarEdge. But anyways, this is a debate, and I sympathize with the argument of SolarEdge investors as well. So I just want to point that out. Okay. What's my third stock? Well, my third stock is HIMS. So HIMS is a stock that I've talked a lot on the channel. I have a 1-hour video called The Bull Case for HIMS, where I explain everything, and I'll put these in the description, where I explain everything as to why I am a owner of HIMS and I believe in this company. So why do I have? Why am I buying HIMS right now? Well, first of all, it's the cheapest it's been in almost a year. It's almost the cheapest it's been in almost a year right now. So it's very, very cheap. And I want to buy HIMS because, of course, while and this is no investment advice again, while I have no issue envisioning Tesla and Enphase being 10x's, each of them, doing a 10x, each of them by around 2030. In my mind, I have no issue with that statement. No investment advice. I don't think they're going to be 100 baggers at least within a 10-year time frame, and that's just because of the law of market cap, right? It's at some point you can't increase market cap too much. So I don't believe they will become 100 baggers unless, of course, the US dollar becomes like Venezuela or Argentinian peso. Then yeah, maybe, but otherwise no. So to do a 100 bagger, in my view, you need to look at companies that are earlier on in their adoption, very early on in their adoption. So you need to move out on the risk curve to increase your odds of catching 100 baggers. And to me, HIMS is that play. HIMS is that play that is further out on the risk curve, but could have a potential to be a 100 bagger. So if you look at enterprise value of HIMS, it's 1.26 billion. 100 bagger would be 126 billion. When you look at the size of companies in healthcare and in insurance business and in the insurance industry and in the hospital business, I don't have that hard time imagining a company in that space reaching a $100 billion valuation. And HIMS, to me, has the best positioning. I consider HIMS to be superior to Teladoc, mostly because the market is showing me that their product is working. Customers are adopting their product tremendously. So what is HIMS? HIMS is an e-doctor and an e-pharmacy. Very simply, it's an app, and let's say you think you have an issue, whatever it is. It could be a ED, it could be a heart health issue, it could be a hair loss. Typically more minor issues. Let's say you have an issue, so you get the HIMS app. You tap a button, then you meet with a doctor. Then the doctor tells you, okay, well, I agree, you should probably be on that medication, and they prescribe it to you, or they tell you, no, I don't think you should be on that medication, sorry. So you see the doctor, and if the doctor approves you for a medication that they deem necessary for your condition, whatever it is, then HIMS acts as a pharmacy and ships to you the drug. So it is both an e-doctor and an e-pharmacy, all in one, all digitally, on an app, and it is so cheap that it is actually cheaper than most co-pays for most insurance in the United States. So they operate entirely outside of the insurance business, which is why I believe they are able to move this fast, because they don't have to deal with the red tape and all of the paperwork related to reimbursement of certain care and certain other types of care. And if you look at how growing, this is a company that has upped guidance 3 times in a row, and now they're predicted to 3 quarters in a row, right? And they're predicted to grow 57% over the next 12 months. The gross margin is 80%. The recurring revenue is 95% plus. And this company keeps being top on all of the app stores and all of the other stores. This is a company that has adjusted EBITDA profitability. So adjusted EBITDA, of course, is a proxy for free cash flow. So bankruptcy is not knocking at the door of HIMS. HIMS is safe, in my view. And for HIMS, when you look, they lose just short of $10 million on a GAAP basis. In my view, GAAP profitability is just a matter of choice for HIMS, right? They could decide to be GAAP profitable if they wanted to. I'm glad they don't. And I'm glad they're spending on marketing to really grow the business quickly to follow that product adoption curve. And I'm very happy to own HIMS. I've done a lot of videos on HIMS on this channel, and this is a stock that I like very much and that I will be buying this September. And last but not least, and this is an asset, this is where I guess most of you will stop watching this video, but that's okay. It's my integrity to tell you about what I'm doing, and what I'm doing is I'm buying Bitcoin. And I am buying Bitcoin, and I've been buying Bitcoin for a while now, and I keep buying Bitcoin. Bitcoin is actually 60% down from all-time high. But it's still better performing than Tesla and Enphase. If you look at the total returns, which by the way, this is GBTC, and there is still a discount on GBTC right now. But we're at 52% for the past 8 years, 52% since 2015. 52% annual return since the launch of this proxy for Bitcoin, which it's a stock proxy you can buy. I mean, it's a fund. My preferred proxy to own Bitcoin through a brokerage account is MicroStrategy, but in a nutshell, they're both proxies. You get exposure to that amazing asset that is Bitcoin. So it's a stock that it's an asset that has been growing faster than Tesla. And by the way, you may know if you follow the channel for a long time, I've been into Bitcoin since 2015, since actually late 2014, and I made the mistake of selling Bitcoin in 2015 because everybody was telling me that I was obviously wrong and that I was obviously stupid to own Bitcoin, right? Entirely stupid in 2015, and of course I was stupid to listen to what people have to say. That's the stupid thing, is when you listen to what people have to say and when you don't listen to your own truth. And so, of course, I've gotten back in Bitcoin today, but I still regret selling my Bitcoin in 2015. This is a stigma that I have, which means that this is an asset that now I'm never ever selling this asset. And I can tell you, people who go through the Bitcoin waves, through these waves of step changes in the value of Bitcoin, every time someone gets through that stage of selling and buying back in, they're adopters for life. And I'm not selling Bitcoin ever again. And actually, the more people criticize Bitcoin, the more this is a contrary indicator for me, which tells me to buy Bitcoin. And I'm very happy to own Bitcoin. There's two major catalysts that are coming for Bitcoin, by the way. One of them is the spot ETF approval, which is likely coming soon now that the SEC lost against Grayscale. So go Grayscale. Very happy to see that. Of course, this has been heavily publicized news. And of course, the halving, which is coming in 2024, April 2024, which means that the new supply will get reduced in half. And whenever the supply gets reduced, we usually see a step change in valuation. And that's just for the more practical reasons as to why I own Bitcoin. But there's fundamental reasons why I own Bitcoin, which I've discussed in the early days of the channel at length in a few videos that are more than an hour long. But the whole idea for owning Bitcoin, of course, is that you have a fixed cap on its supply. It is not like a commodity whose price increases, and when price increases, supply increases. In the case of Bitcoin, it doesn't matter if Bitcoin were to reach, say, $1 million a coin, the supply is going to remain the same, right? If gold reaches $10,000 an ounce, you're going to have a whole bunch of gold miners who are going to start looking for more gold and finding more gold. That's the whole point, and you're going to have a whole anyway. So it's one of the commodity where really the price of that commodity does not increase the mining of that commodity, and the mining activity, of course, is strong, but the mining of Bitcoin is rewarded in terms of Bitcoin as the same amount of coin. That does not change. It's always the same amount of coin that is being issued. That's why we say one BTC is one BTC. One of the big advantages, of course, of Bitcoin is that it's protected and run by code and not by a Fed banker, by a central banker. And this means that it does not devalue based on, statistics, or there's nobody setting interest rate for you in the Bitcoin world, and that's what I love very much. I consider it actually over the long run, and this is a fact that you get to understand only when you've studied Bitcoin for hundreds of hours, and I am well over hundreds of hours studying this asset. It's actually the least risky investment out there. Now, most people don't realize that because we operate in a frame of reference that is based in US dollars and that is not based in Bitcoin. But once you start thinking in Bitcoin, you realize it is the least risky investment out there because it does not move. One Bitcoin is one Bitcoin. So it's all about you have to start thinking in Bitcoin. Now, of course, this is not investment advice, not lifestyle advice, not advice of any kind. Here's the last thing I'll say. I own stocks and I very much love stocks, but the reason why I do hypergrowth stocks is because I consider any stock that does not get 15% more dollars each year. If each year you're not going to increase your revenue by 15% more, you are drowning as a company. And that's why my stocks, I want stocks that do well over 50% revenue growth over the long run, because they are not drowning. These stocks are not drowning. In the case of Bitcoin, you don't have to worry about that because Bitcoin does not have to depend on monetary inflation. Bitcoin only depends on Bitcoin because one Bitcoin is one Bitcoin. So Bitcoin, in conclusion, is not a derivative of a US dollar. And it's not like bonds and it's not like stocks. And there's so many different aspects of Bitcoin, and that's why, just like Tesla, this asset class is a fascinating asset class, and it is followed by a new crowd of investors, right? Gen Z, millennials. To me, I have a little doubt that this is the future, and I'm very happy to own Bitcoin. So anyways, this was not investment advice. This is just what I'm doing, just the 4 assets, 3 stocks and 1 asset that I'm buying this month in September of 2023, and that is it. So I appreciate your likes. Please subscribe and have a wonderful, wonderful day.